Hi there. SHIB is down by about 2% this week. Let's look at it through the Wyckoff legs and see whether there are any whales move. If you're new to my session, I'll cover the Wyckoff stage, potential price trend change, as well as key price levels. These are education content, not financial advice. The weekly chart of SHIB is showing us that it's trying to stabilize at the level around 0.00005 zeros, basically 61. Let's call that 61. Okay, this is a level. If you look at right over here, this blue dashed line. If we look back to the history of SHIB, it was actually where the September 2021 low was. Okay. However, you can also tell from the chart that it is basically not anything solid. Okay, anything below the 681 red key level is basically an exploration zone, a C2 bottom area. Okay, so it can still be violent in case if any kind of news come out that doesn't provide any kind of relief to the current macroeconomic or liquidity situation. Okay? The testing period is still going on. The entire accumulation cycle is basically a test of paper hands or diamond hands by the whales. Okay, they're going to check out the paper hands or was diamond hands, but different situation changes. They're no longer diamond hands. Looking at the chart, it is still at the early stage of accumulation cycle. However, sometimes an accumulation cycle can finish very quickly. Nevertheless, what we need to see is something we call sign of strength, meaning a bunch of candlesticks going up to challenge the blue key level, at least the light blue 937, best if it goes challenge the 1001. All right. This is the basic signal we need just to get a sense of how willing are people to get back to SHIB again. Of course, in addition to price climb, we need to see volume accompanying it at higher than average volume. What I'm saying is, okay, if we look at what happened over here, this rise over here, you see these white volume bars at the bottom, they are clearly higher than average. So that's what I meant. Okay, so this is the big picture. Let's get to the daily chart and see whether there's any potential price trend change. We have mentioned a couple of dates. The 18th has already passed. That window is closed. What we're looking at now, the closest one is 4th of March, but it's a bit of a stretch target right now because it has to first go above the red key level of 681 and then go through the 760 orange key level also in order to get outside of the downtrend. Okay? More reasonable would be near the end of March when it continues to trade towards these triangles. Okay? It is going to get an opportunity to confirm the downtrend that started September last year is going to be over. They're not a certainty. Those are opportunities coming in. And given we've got higher lows, over the course of past 2 weeks, it's just a matter of time. Like I said, when the volume comes back, it currently is still struggling right below the red key level of 681. You see, today, there was quite a bit of selling, that long wick from the top. The volume is about average for the past 5 days. So uncertainty is still there. You see a lot of economic data is coming to be released near the end of the month, as well as starting March, the manufacturing PMI. So those data is going to impact whether this exploration is going to continue to the south, or is it really getting the chance to get this downtrend finished. Okay. The slightly positive thing that I want to raise is that it's still staying on the stronger side of the downward channel. We want it to stay the same, not to come back to the weaker half. Okay, that's the center line over here. All right. If you're interested to access these sessions 2 days earlier than the others, join the channel membership now. Here's another analysis for you. Thank you.